Welcome to another session on company law, or rather the corporate law as according to your syllabi. And in this series of lectures, I have been focusing on the legislative provisions included in mainly the Companies Act, and thereafter I will be also taking through certain other legislative enactments that are very necessary for your examination paper. So with this, I would like to start my today's lecture with a very important area, especially for accountants and those who are studying accountancy, where we would be able to understand the duties of mainly the auditors of company and the financial reports of a company. So let me start today's lecture on that particular area, which would interest you more, as I mentioned, the area concerning more of a role for the accountants in a company. Now today's lecture is the financial reports and the auditors. Now we know that the auditors play a big role in corporate affairs, and they are appointed mainly to attend to financial reporting and check how the finances and accounts have taken place in the corporate structure. And also the financial reports play a vital role in a company, as they show how the finances and accounts have been attended to in a company. So first of all, let me take you through how to appoint auditors in a company, appointment of auditors. Now, according to section 154(1) of the Companies Act, a company shall at each annual general meeting, or rather AGM, appoint an auditor. It's one of the very main points in the agenda in an annual general meeting, that the appointment of auditor has to take place normally after the ratification or the appointment of the directors take place. So thereafter, the next important agenda item would be to appoint an auditor. So in appointing an auditor is to hold office from the conclusion of that meeting, the AGM, until the conclusion of the next annual general meeting. So the auditor of a company functions from the day an annual general meeting is held, and after that till the next annual general meeting is held. So we cannot exactly say that the auditor's period of office is 1 year, because as we already know and discuss regarding annual general meetings, the annual general meeting can be held even after the lapse of 1 year, but within the period that we discussed in that lecture in having or holding an annual general meeting. So whatever the period would be, the auditor appointed at a AGM will hold office until the next annual general meeting is held. Only at the next annual general meeting that the office of the auditor will be re-elected along with the agenda item. And also the audit the financial statements of the company, and if the company is required to complete group financial statements, those group financial statements for accounting period next after the balance sheet date for which financial statements were audited. So therefore, auditor should be appointed, as mentioned here, to hold office from the conclusion of the meeting of the AGM until the conclusion of the next annual general meeting. And also that the audit, and he should audit the financial statements of the company, and if the company is required to complete group financial statements where there are subsidiaries, then those group financial statements for the accounting period next after the balance sheet date for which financial statements were audited, the auditor plays an important role. Now, as per section 154(2), the board of a company may fill any casual vacancy in the office of auditor, but while the vacancy remains, the surviving or continuing auditor, if any, may continue to act as auditor. In case an auditor has not been officially appointed, say at annual general meeting, then the existing auditor can continue to hold office as the auditor until a next appointment is done. So, while the vacancy remains, the surviving or continuing auditor, if any, may continue to act as auditor until such a new appointment is made, as per section 154(2). Section 154(3) states that the Registrar General of the ROC may appoint an auditor where at an annual general meeting of a company no auditor is appointed or reappointed and no resolution has been passed under subsection 2 that we discussed before. That means the Registrar of Companies has the power to appoint an auditor if no reappointment has been done or no resolution has been passed to appoint a new auditor. Or he also can appoint an auditor where a casual vacancy in the office of auditor is not filled within 1 month of the occurring of such vacancy. Whenever there is a vacancy where the existing auditor has vacated the post, then a vacancy arises, then in such a scenario, the Registrar of Companies can fill that casual vacancy within 1 month of occurring such vacancy. Section 154(4) further states that the Registrar of Companies is entitled to appoint an auditor under subsection 3, the previous subsection that we discussed, where the company within 5 working days of the power becoming exercisable given written notice to the registrar. So, if the company has given notice to the registrar that there is no auditor and the auditor office is vacant, then within 5 working days, once the written notice is given, the registrar is of the fact that no auditor has been appointed, then the registrar is entitled to appoint an auditor. Now, as per section 154(5), where a company fails to comply with the requirements of the earlier subsection that we discussed, subsection 4, where the registrar has, the company has failed to inform the registrar of the vacancy existing in the office of the auditor, then if the company fails so, the company shall be guilty of an offence and be liable on conviction to a fine not exceeding 200,000 rupees. So, there is a fine imposed upon a company if it fails to inform the registrar of the existing vacancy. And every officer of the company who is in default, who fails to take the necessary action of informing the registrar, shall be guilty of an offence and be liable on conviction to a fine not exceeding 100,000 rupees. Whereas the company is on one hand liable for 200,000 rupee fine, and every such officer, mainly the directors, are individually responsible and liable to pay a fine of 100,000 rupees in such a scenario. Now, when auditors are working or servicing a company, the auditors are in fact eligible to obtain fees for their services, and also whatever the expenses that they have incurred towards auditing the company, they are entitled to obtain same. According to section 155, the fees and expenses of an auditor of a company shall be fixed. If the auditor is appointed at a meeting of the company by the company at such meeting or in such manner as the company determines at the meeting. So when the company appoints an auditor at a annual general meeting or in other subsequent manner, the company must also arrive at a decision of what should be the remuneration or the fee that the company must pay the auditor. And it should be determined at such meeting, appointing the auditor at the time the auditor is appointed. If the auditor is appointed by directors or by the directors, then also the directors must ascertain as to the amount of fees that should be paid to the auditors. Or if the auditor is appointed by the registrar in the earlier cases that we discussed, then in that case the registrar must indicate the amount of fees that is to be paid to the auditor so appointed by him. Now, can a partnership business be appointed as auditors? This is a very important area because there are audit firms operating in the country. So, this particular firm, should it be a company or can that be also a partnership business? Now, in Sri Lanka, if you take a law firm is generally a partnership. And in a recent judgment by the Supreme Court of Sri Lanka, it was held that a law firm cannot be a corporate entity. So, obviously, a law firm needs to be a partnership. Now, likewise, here the question arises as to what kind of status that an audit firm can have. Can a partnership business be appointed as auditors, where there is a partnership business consisting of chartered accountants who have formed an audit firm? According to section 156, a partnership may be appointed by the firm's name to be the auditor of a company. So that means that if there is a partnership called ABC, an audit firm, then such partnership can be appointed as the auditor of the company in its name. You don't need to appoint in the name of the persons in that audit firm, but you can simply say that the auditor of the company is ABC. That's the partnership business. If the partners are persons who are qualified to be appointed as auditors of the company, but only if the partners in the company, in the business firm or the partnership are in fact qualified to be appointed as auditors for this company. So, if someone asks, how could you determine who can be appointed as auditors? Now, there is a general requirement that auditors have to be chartered accountants, but also there needs to we need to look at the articles of the company if there are any contrary matters that are mentioned in the articles. So, you can look at the articles to see what kind of qualifications that the articles may perhaps have granted in the company. As per section 156(2), the appointment of a partnership by the firm's name, as mentioned earlier, to be the auditor of the company is deemed subject to the provisions of section 157. 157 deals with the qualifications of auditors. So, to be appointment of all the persons who are partners in the firm from time to time. So, therefore, the partnership business of auditors need to fulfill that the auditors who are in that partnership business are having the proper qualifications as of section 157. Now, when you look at the qualifications of auditors, according to section 157(1), it says that a person shall not be appointed to act as an auditor of the company unless that person is a member of the Institute of Chartered Accountants of Sri Lanka or is a registered auditor. So there are two qualifications. Either that the auditor is a member of the Institute of Chartered Accountants of Sri Lanka, that is your institute, or that he is a registered auditor that is recognized under the law. Now further section, this is the qualification to be appointed an auditor. So further under section 157(2) says that notwithstanding the provisions of subsection 1, the previous one, a person shall not be appointed or act as auditor of a company other than a private or a company limited by guarantee unless that person is a member of the Institute of Chartered Accountants of Sri Lanka. So now what does it say? That if an auditor to be appointed to any company other than a private company or a company limited by guarantee, he or she must be or shall be a member of the Institute of Chartered Accountants of Sri Lanka. So if you take for example a public company, the auditor of a public company shall always be a member of the Chartered Institute of Chartered Accountants of Sri Lanka. But in the case of a private company or company limited by guarantee, it may be a Chartered Accountants member or a registered auditor, as the subsection 1 goes. However, as per section 157(3), none of the following persons may be appointed or act as an auditor of a company. So now, who are disqualified to be appointed as auditors of a company? A director or employee of that company cannot be appointed. Whether he is a qualified accountant, but due to the fact that he is a director or employee of the company, he is disqualified to be appointed as a company auditor, as a company auditor of that company. He may hold auditorship of another company, that is okay, but within this particular company, if he is a director or employee of this company, he shall not be appointed as an auditor. He is disqualified. Then a person who is a partner or in the employment of a director or employee of the company. So if it's a partnership business, a partner of that business shall not be appointed an auditor. Or if he is employed as a director, or employed as a director, working director for example, or employee of the company, then they are not qualified to be a proper auditor of the company. Then a liquidator or an administrator or a person who is a receiver in respect of the property of the company. Now, if in case this company has gone into liquidation, the person acting as the liquidator in the liquidation process cannot be appointed as an auditor. And also, if there is an administrator appointed by the court for a particular company going under winding up or some other matter likewise, such administrator cannot be appointed as an auditor of this company. Also, it is prohibited that a body corporate be appointed as an auditor. Now, earlier I told you that in a business firm can be a partnership or a company. Now, I also told that in Sri Lanka, a law firm shall only be, like, if there's a law firm, then it has to be a partnership and not a company. So likewise, even here, a business firm of auditors constituted as a body corporate or as a company cannot be appointed an auditor. So like the same situation of a law firm. Then a person who by virtue of paragraph ABC above may not be appointed or act as auditor of a related company in the sense that a subsidiary or holding company to this, or any other kind of relationship that this company is having with that particular company. So a person who by virtue of ABC like a director, employee, liquidator, administrator, partner cannot be appointed as an auditor, because if this company is related to the other company or other company of the firm that this particular auditor is related. Nevertheless, as per section 157(4), a person who holds any office referred to in paragraph A, B, C of subsection 3 may not be appointed or act as auditor of a company for a period of 2 years after such person has ceased to hold that office. Now, if a particular person who had been holding an office as mentioned in the above paragraphs, and later he is to be appointed an auditor of this particular company, he must wait for the lapse of 2 years, because within 2 years he cannot be appointed as an auditor of that company. As stated in section 157(5), regulations may be made under the Act providing for the qualifications necessary to become a registered auditor, the procedure for the registration of auditor, the fees payable for such registration. Now, under the Act, the ROC, the Register of Companies, can make further regulations specifying that additional qualifications necessary to become a registered auditor, or that he can produce a regulation on the procedure for registration of such auditors, or the fees payable for such registration. So the ROC is at liberty to make regulations under the Act, Companies Act, with regard to these areas: the qualifications necessary to become registered auditor, the procedure for registration of auditors, the fees payable for such registration. Then let's look at the automatic reappointment of auditor. Now, when an auditor is appointed, auditor can hold office until the next AGM, and also he can be removed as an auditor, but he also can be reappointed as an auditor of the same company. Now, as per section 158(1), an auditor of a company other than auditor appointed under subsection 1 of section 159 shall be deemed to be reappointed at an annual general meeting of the company. So, existing auditor can always be reappointed as the auditor for the subsequent year at the annual general meeting, but unless he is not qualified for such appointment. That means if he is disqualified for such appointment, then he cannot be appointed, or the company passes a resolution at the meeting appointing another person to replace him as auditor. So at the AGM, if the company appoints nominates a different person, then that means a company passes a resolution at the meeting appointing another person to replace him as auditor, then he cannot be reappointed. Or the auditor has given notice to the company that he does not wish to be reappointed. If the existing auditor has given notice to the company that he shall not be reappointed, then he is also not possible to be reappointed to the company again in the subsequent year. Now, whereas according to section 158(2), an auditor is not automatically reappointed, but he has to be nominated and seconded, or proposed and seconded at the annual general meeting. If the person who it is proposed to replace him dies, or he has become incapable or disqualified from being so appointed, that means an auditor is not automatically reappointed. Not automatically reappointed. That means at the AGM sometimes one may say we prefer to reappoint the same auditor who has existed during the last year. But such automatically reappointed thing will not come into to force if the person who it is proposed to replace him, that means the next subsequent auditor, dies or is or become incapable or disqualified from being so appointed. So automatically reappointment is not automatically reappointed. If the person who is to propose to replace him dies or he becomes incapable or disqualified from being so appointed. So in that case, if the subsequent auditor has fallen into such a situation that he dies or becomes incapable or disqualified from being so appointed, the existing auditor will not be reappointed automatically, but he has to be proposed and seconded, as I mentioned earlier. So that then only the same existing auditor can take office for the next year. Now let us see how the appointment of the first auditor in a company takes place. That means when a company is for the first time formed or incorporated, the company must have at the inception an auditor, because it is important that the auditor go through the financial reports, accounting, everything during the first year of existence in the company. Likewise, you appoint an auditor at the AGM and then let that auditor operate during the period up to the next AGM. So if a company has been formed newly, then as per section 159(1), the first auditor of a company may be appointed by the board of the company. So it is the board that appoints, not the shareholders. The board that appoints, the board of the company, and before its annual general meeting, such appointment has to be made by the board. And if so appointed, the auditor will hold office until the conclusion of that AGM, that meeting, the first AGM of the company. However, as per section 159(2), if the board does not appoint an auditor at the initial stage, the company shall appoint the first auditor at a meeting of the company. That means if the board of directors have not appointed an auditor, then the company, that means the shareholders meeting, can appoint the first auditor of the company. So first and foremost, the duty to appoint an auditor firstly rests with the board of directors. But if the board of directors have not appointed such auditor, then the shareholders at any of its meetings can appoint the auditor before the first AGM. Nevertheless, section 159(3) states that neither the board nor the company shall be required to appoint an auditor in accordance with the provisions of this section if a unanimous resolution is passed by shareholders that no auditor be appointed. Now, in case that the shareholders by a unanimous resolution decide that no auditor be appointed at initial stage, then neither the board nor the company shall be required to appoint an auditor. Such a resolution, however, ceases to have effect at the commencement of the first annual general meeting. So, if the shareholders have taken such a decision, such decision will become inoperative when or at the time of the first annual general meeting take place, because at the first annual general meeting it is always necessary for the appointment of an auditor. So, during the first year of existence of a company, it can operate without an auditor if it fulfills those statutory requirements that we discussed, but we cannot continue likewise without an auditor upon the first AGM, because at the first AGM anyway the company has to appoint the auditor. Now when an auditor is appointed and he is engaged in the company affairs, how to replace such an auditor is the next important area that we need to discuss. The replacement of an auditor, replacement of an existing auditor. You replace one auditor with another auditor. How can you do it? According to section 161, a company shall not appoint a new auditor in place of an auditor who is qualified for reappointment. So, first and foremost, a company shall not appoint a new auditor in place of an auditor, existing auditor, who is qualified for reappointment. If the existing auditor is qualified for reappointment, then the company shall not appoint a new auditor in place of an auditor. Unless, but how unless? At least 20 working days written notice of a proposal to do so has been given to the auditor. If the company does not want this auditor to continue, then in that case the company must give 20 working days written notice of the proposal of removing or not appointing that auditor for the company. And the auditor has been given reasonable opportunity to make representations to the shareholders on the appointment of another person, either in writing or by the auditor or his representative speaking at a shareholders meeting. Whichever the auditor may choose. So, and also the existing auditor should be given reasonable opportunity to make representation to the shareholders on the appointment of another person in place of the existing auditor. He can do so either in writing or by the auditor or his representative speaking at a shareholders meeting. But whichever the auditor may choose, either he can do it in writing or he can speak at the shareholders meeting of appointing some other person in place of him, where he has to be given reasonable opportunity to make such representation. As per section 162, an auditor is entitled to be paid reasonable fees and expenses by the company for making representations to shareholders under this section. So, if the auditor is to be removed, he should be afforded to provide reasonable opportunity to make representation, and in doing such representation, he should be reasonably paid by company for making representation to the shareholders under this section. Now, why is it important that auditor is given such opportunity? That is because the auditor is the main financial reporter for the company. The financial auditing has to take place through the auditor. So therefore, if for example the company is not doing good, or if there are any things that in accordance with the financial report the auditor has to showcase and keep give reasonable clarifications to the company shareholders, then in that case he should be given that opportunity, because he is a very important person in the company and therefore the auditor should be paid reasonably for making representations of what the company is going on. Now let us look at the statement by person ceasing to hold office as auditor. Now if an auditor is to cease office, not to continue, but that his office has been now coming to the end, ceasing, then the statement to be made by such auditor. Section 161(1) states that if an auditor resigns or ceases for any other reason to hold office, he shall deliver to the company a statement of any circumstances connected with his ceasing to hold office, which he considers should be brought to the attention of the shareholders, and creditors of the company, or he considers that there are no such circumstances, a statement that there are none. So, an auditor who is ceasing or resigning from the office of auditor, this particular auditor shall be given the opportunity to deliver to the company a statement of any circumstances connected with his ceasing to hold office, which he considers should be brought to the attention of the shareholders, so that the shareholders are well aware, well informed of the reasons why the auditor is resigning or ceasing to hold office, or creditors of the company. Or if he considers that there are no such circumstances, even a statement that there are none, he should be given the opportunity to present. Now, under section 161(2), it further states that the statement required under subsection 1 shall be delivered by the auditor if he resigns with notice of resignation, or if he gives notice that he does not wish to be reappointed with that notice, or if he ceases to hold office for any other reason, and within 10 working days of ceasing to hold such office, he should such statement be given by the outgoing auditor. Section 161(3) states that if the auditor has stated circumstances which he believes ought to be brought to the attention of the shareholders or creditors of the company, if the auditor has stated circumstances which he believes ought to be brought to the attention of the shareholders or creditors, then the company send a copy of the statement to each shareholder. That means, if the auditor has stated circumstances in writing which he believes ought to be brought to the attention of the shareholders or creditors, where the auditors can inform the company that to make available their statement to the shareholders of the company or the creditors of the company, so that the real investors are the shareholders, the creditors have a stake in the company. So therefore, they should be informed of what the auditor has to tell. So then the company shall send a copy of that statement to each shareholder and deliver a copy of statement to the registrar of companies as well. Such statement, each copy of such statement should be given to the shareholder as well as to deliver a copy to the registrar, provided that the company may, with permission of court, obtain an order, the cost of which is to be paid by the auditor, refrain from sending copies to shareholders or reading the representations at the meeting so convened. If the company obtains permission of the court not to send these copies of the auditor statements to the shareholders, then the court can give permission to refrain from sending copies to shareholders or reading the representations at the meeting so convened. Now, in such a case, when an order is obtained obtained by an order, the cost of which is to be paid by the auditor, then in that case. So here it is a situation where the company refrained from presenting the auditor's statement to its shareholders or creditors by obtaining the permission of the court not to send such copies to shareholders or reading the representations made by the auditor at the meeting so convened by the company. However, as per section 161(4), where an auditor fails to comply with subsection 1, that he fails to bring to the attention of the shareholders and creditors of the matters, he shall be guilty of an offence and be liable on conviction to a fine not exceeding 200,000 rupees. So there is a penal section if the auditor fails to present the circumstances what he believes ought to be brought to the attention of the shareholders or creditors. Section 161(5) further states, penalizes the company also, where it states that if a company fails to comply with subsection 3 earlier of not presenting the written statements of the circumstances that believe ought to be brought to the attention of the shareholders or the creditors, then if the company has failed to do so, the company shall be guilty of an offence and be liable on conviction to a fine not exceeding 200,000 rupees. And apart from the company, every officer of the company, the directors, who is in default shall be guilty of an offence and be liable on conviction to a fine not exceeding 100,000 rupees. The individual penalty also rests at the rate of 100,000 rupees. Now, another important area is that in carrying out the duties as an auditor, the auditor should not have any conflict of interest with the company. That means the auditor shall not engage with business transactions that are favorable to him. So, auditor should avoid conflicts of interest. According to section 162, an auditor of a company shall, in carrying out the duties of an auditor under this act, ensure that his judgment is not impaired by reason of any relationship with or interest in the company or any of its subsidiaries. So that means an auditor of a company must not do business or in any other kind of transaction with the company that he is auditing. He shall not have any kind of benefit out of the company, and he shall not be a party to any kind of contract that, or in any kind of relationship to a contract that this company is performing, because it amounts to conflict of interest. So now let us look at the area concerning the auditor's report. This is a very important piece of document in a company, because the auditor's report details out all the affairs in the company. As you may know already in your accounting subjects, that the auditor's report will carry all kinds of auditing. It could be financial auditing, it could be management and system auditing, whatever. So the auditor's report is a very important document. Sometimes I have seen in certain companies that they, rather than producing an auditor's report, this is mainly with regard to associations, of course, right? they provide at the end of the year at an annual general meeting a statement as to the accounts. Now, statement as to the account is different from an audit report. An audit report is a much more detailed, where the auditor is also supposed to provide his own judgment as to the affairs of the company, as to how the affairs of the company have taken place. So, auditor's report is a very critical aspect of the company, and it is in fact the main piece of legislation or main piece of literature that the investors rely upon, the shareholders rely upon, creditors rely upon, as well as the prospective investors rely upon, especially in the case of a prospectus being given with the objective of attracting shares to others. Then those who are interested in investing as prospective investors in a company, they would definitely like to know what the auditor has reported. So, the auditor's report is a very important piece of literature in a company. Now, according to section 163, the auditor of a company shall make a report to the shareholders on financial statements audited by him. So, the auditor's duty is not merely due towards the directors who appoint them, but the shareholders who are the real actual owners of the company. So, the auditor has the duty to make the report to the shareholders on the financial statements audited by them. Now, it is not only the financial aspects that they may look at. If they are appointed for management and systems audit, they may even go to that extent of auditing the management and systems in order to have a very clear picture of the company affairs and what the company has gone through during the year. So, therefore, it is the duty of the auditor to report to the shareholders mainly on the financial statements audited by them. So, they will go through the income statement, the expenditure statements, the prevailing assets, the liabilities, the liquidities, and all other things pertaining to the company, and then give financial statements so that it would be clear for the shareholders on how the company has survived throughout that year. That is why, the auditors should be qualified accountants. Now, section 163(2) requires that the auditor's report shall state. Now, what are the contents of an audited report? The main contents are that the auditor must give the basis of his opinion, because the auditor will be reporting after the financial statements are done, will be making his own judgment, providing his opinion on how things have to be done and judgment on how things have taken place and so forth. So, he has to provide the basis, he has to state the basis of opinion he has arrived at the audited report. Then the scope and limitations of the audit, to what extent that he has gone to, what were his limitations in doing the financial statement auditing. So, he has to give the scope and limitations of the audit, and also whether the auditor has obtained all informations, explanations that was required, whether the auditor has obtained all information and explanations that was required. Was he in lack of certain information and other explanations from the company? So, he has to make a statement whether he has obtained all information or whatever the information that he has obtained and explanations. Whether in the auditor's opinion, as far as it appears from an examination of them, proper accounting records have been kept by the company. Also, he has to report whether the company has maintained proper accounting records, because this is very important, that the auditor must make it clear whether the company has maintained proper accounting records. All sorts of documents, annexures, supporting documents, connected documents, everything he has to go through and see whether all those things have been kept by the company in the proper accounting system. Then whether in the auditor's opinion, the financial statements and any group financial statements give a true and fair view of the matters to which they relate, and if they do not, the respects in which they fail to do so. So, whether in the auditor's opinion, the financial statements and any group financial statements, if any, give a true and fair view of the matters to which they relate, and if they do not, the respects in which they fail to do so. The auditor has to make it clear in his statement. And whether in the auditor's opinion the financial statements and any group, if it's a group financial statements, comply with the requirements of section 151 or section 153 as the case may be, and if they do not, then the respects in which they fail to do so, the auditor must report. So these are very important essential elements in an audited report, as the section 163(2) requires the auditor to state as a mandatory and obliging matter. He can report any other things, but these are very important for him to report. As stated in section 163(3), the auditor of a company shall, at the same time as he delivers his report to the company, deliver to the company a statement. Now, the auditor of the company shall, at the same time as he delivers his report to the company, he also deliver to the company a statement. So, along with the audited report, he also has to deliver a statement of what? Of the existence of any relationship other than that of auditor, which the auditor has, or any interest which the auditor has in the company or any of its subsidiaries, so as to remove any kind of conflict of interest that we discussed before, to show that the auditor does not have any conflict of interest, and the amounts payable by the company to the person or firm holding office as auditor. So, what kind of remuneration or fee that the audit firm or the auditor ought to have from the company as audit fees and expenses, and as a separate item, any fees and expenses payable by the company for other services provided that person or firm. Now, fees, of course, you can understand that it's the professional charges that the auditor charge. Maybe like, okay, he will have his professional charge. On top of that, for utilizing his people throughout a certain period in that particular company, looking and going through all the documents or the logistical costs for employing such people, all kinds of things. And also, if the auditor was supposed to obtain certain reports from, say, the ROC or from another organization or a government statutory body or private body, so whatever the expenses that he has incurred towards that, including transportation, it could include also the meals during which he and his team have consumed in the process while being in the company, auditing all the things. So, all those things fall within the meaning of fees. Fees mainly professional fees, but others are expenses paid by company for the services provided So he has to give a statement on what fees he is entitled to in the process of the audit, and also the expenses that he has incurred towards the entire audit process. Now, audit process is not, as you know, you may know that it's not a very simple thing. Some companies have to be audited for several weeks. It all depends on the amount of business and work that the company has employed. So going through all the statements, the bills, the receipts, the asset registry, and all these things, working on the deterioration factors, all the things he has to audit. So it's a big role, it's a big duty, and he has to execute that duty not only for the company but also, as I told you, the shareholders, the prospective shareholders, and so forth, the creditors. Now let us look at the auditor's access to information. Now, in doing a proper audit, the auditor must have access to the necessary information in the company. If the auditor doesn't obtain the necessary information to compile the audit report, then the audit report cannot be considered a completed version, because there are gaps and lacks. So therefore, the auditor must have access to all the necessary information that he requires from the company. So under this, section 164(1) requires that the board of a company shall ensure that an auditor of a company has access at all times to the accounting records and other documents of the company that are necessary for the auditor to effect his audit process and finally put out or produce a good audited report. As per section 164(2), an auditor of a company is entitled to require from a director or employee of the company such information and explanation as he thinks necessary for the performance of his duties as an auditor. So the auditor can require from a director or employee of the company whatever the necessary information that he requires to compile his audited report. And if he needs further explanations, he can have consultations, discussions, meetings with the employees, with the directors, as he thinks necessary for the performance of his duties as the auditor. As per section 164(3), where the board of a company fails to comply in providing all the access to the auditor to make proper audited report, then every director of the company who is in default or who has failed to do so, execute a proper duty, shall be guilty of an offence and be liable on conviction to a fine not exceeding 100,000 rupees. Further, section 164(4) states that a director or employee who fails to comply with subsection 2, where they have not given, the directors or employees have not given fair opportunity for the questioning or obtaining of information explanation from auditor, for auditor, then, or provides false information to the auditor, then shall be guilty of an offence and be liable on conviction to a fine not exceeding 100,000 rupees. However, section 164(5) makes proviso that it is a defence to an employee charged with an offence under subsection 4 if he proves that for an employee charged with such an offence as per section 164(4), then he can take a defence why he has failed to do so if he proves that he did not have the information required in his possession or under his control, or by reason of the position occupied by him or the duties assigned to him, he was unable to give explanations required. So, in either of these circumstances, such employee who fails to give the necessary information explanation to the auditor can take up the defense that number one, he did not have the information required in his possession or under his control, or by reason of the position occupied by him or the duties assigned to him, he was unable to give the explanations required. Now, the next area that I would like to take you through is the auditor's attendance at shareholders meetings. Now, whether the auditor can attend a shareholders meeting. Section 165(1) requires that the board of a company shall ensure that an auditor of the company is permitted to attend every meeting of the shareholders of the company if the auditor wishes to. The auditor should be allowed to attend every meeting of the shareholders of the company in that case, and the board shall ensure that the opportunity is given to the auditor to do so, and also that the auditor receives the notices and communications that a shareholder is entitled to receive relating to a meeting of shareholders. So, obviously, an auditor receives notices and communications whenever there is a meeting of the shareholders. So, if the auditor prefers to, or if he thinks that his presence is necessary there in order to observe certain things, then he is notified to attend. He is notified that the meeting would take place so that he can take connivance of that and may be heard at a meeting of shareholders. He also can be heard at a shareholders meeting if the auditor wants to make a point at a shareholders meeting. The shareholders must allow him to make a point of such, which he attends on any part of the business of the meetings which concerns him as auditor. Only to the extent that in executing his role as an auditor, he has concern over such business of the meeting. So, then the shareholder must give opportunity, shareholders must give opportunity for the auditor to make such statements or representations, and he may be heard at such a shareholders meeting. Section 165(2) states that where the board of a company fails to comply with subsection 1, or in case the board does not provide the opportunity for an auditor to attend such shareholders meeting, then every director of a company who is in default, who has not allowed the auditor so, shall be guilty of an offence and be liable on conviction to a fine not exceeding 100,000 rupees. A fine of 100,000 rupees will be imposed against such director, every director. So, if there are 5 directors, all 5 directors will have to pay 100,000 each. Then the next area is regarding sending the annual report to shareholders. Now, it is the duty of the company, basically with the directors, that the annual report of the company be sent to the shareholders, because the shareholders are the real owners of a company. So, therefore, the shareholders are to be served with an annual report of the company. As stated in section 166(1), the board of every company shall within 6 months after the balance sheet date of the company. Now, I will tell you later what is this balance sheet date, but basically balance sheet date is the date on which that you complete your accounts, right. So, the board of every company shall within 6 months after the balance sheet date of the company prepare an annual report on the affairs of the company during the accounting period ending on that day. Now suppose that the balance sheet date was 31st of December in a year. Then the board from there onwards within 6 months, that means before 30th of June the following year, must create an annual report and also include what all activities what have taken place during that balance sheet year. Not the period after the balance sheet date, but the period that was considered at the time of the balance sheet date. The affairs of the company needs to be reported by way of an annual report, what has happened in the company. Section 166(2) further states that where the board of a company fails to comply with subsection 1 in providing an annual report, every director of the company who is in default shall be guilty of an offence and be liable on conviction to a fine not exceeding 100,000 rupees. As per section 167(1), the board of a company shall cause a copy of the annual general meeting report to be sent to every shareholder of the company not less than 15 working days before the date fixed for holding the annual general meeting of the shareholders. That means that the board must make sure that a copy of the annual general meeting report of the previous AGM to be sent to every shareholder of the company not less than 15 working days. That means before 15 working days to the next annual general meeting of the shareholders. Provided that a company may in the first instance send every shareholder the financial statement in a summarized form as may be prescribed in consultation with the Institute of Chartered Accountants of Sri Lanka, together with the annual report, and provided further the company shall inform each shareholder that he is entitled to receive full financial statement if he so requires within a stipulated period of time. So you see the importance of sending the financial statements on time. The only exception is that if they can get a summarized report to be sent in consultation with the Institute of Chartered Accountants of Sri Lanka. As stated in section 167(2), where the board of a company fails to comply with subsection 1, where the board of a company fails to comply with subsection 1, that an annual report has been not, the financial statement has not been provided, every director of the company shall be guilty of an offence and be liable on conviction to a fine not exceeding 100,000 rupees. So in a case that the directors were obliged to take, for example, the permission of the Institute of Chartered Accountants in relation to a summarized format of financial statement, then they should pay a penalty of 100,000 rupees. Now let us look at what are the contents in an annual report. Contents of the annual report. Annual report to be sent prior to the AGM, 15 days prior to the AGM. According to section 168(1), the annual report of the board shall be in writing and be dated and subject to subsection 2 shall include or content described so far as the board believes is material for the shareholders to have an appreciation of the state of the company's affairs and will not be harmful to the business of the company or any of its subsidiaries. Any change during the accounting period in the nature of business of the company or any of its subsidiaries, the classes of business in which company has an interest, whether a shareholder of another company or otherwise. So, this is something that is very importantly be given in the annual report. Number 2, include financial statements for the accounting period completed and signed in accordance with section 151. Now, when you say accounting period completed, it is up to the balance sheet date. If the annual general meeting has been convened, say 2 months afterwards, you do not need to give what has happened during that 2 months, only up to the balance sheet date. So, include financial statements for the accounting period completed and signed in accordance with section 151, and any group financial statements, if there is a group, then for the accounting period completed and signed in accordance with section 152. Then thirdly, where an auditor has been appointed by the company, include that auditor's report on the financial statements and any group financial statements audited report. Then fourthly, describe any change in accounting policies made during the accounting period. If there is any accounting policy change, decision that has taken place in the company, then describe that change made during that accounting period. Fifth one, state particulars of entries in the interest register made during the accounting period. Also, state particulars of entries in the interest register made during the accounting period. Then state the remuneration and other benefits of directors during the accounting period. State the remuneration and other benefits of directors during the accounting period. State the remuneration and other benefits of directors during the accounting period. Then state the total amount of donations made by the company during the accounting period. Then state the names of the persons holding office as directors of the company as at end of the accounting period, and the names of any persons who cease to hold office as directors of the company during the accounting period. Then state the amounts payable by the company to the person or firm holding office as auditor of the company as audit fees and as a separate item, fees payable by the company for other services provided by that person like expenses or the firm. Then state the particulars of any relationship other than that of auditor which the auditor has with or any interest which the auditor has in the company or its subsidiaries, and be signed on behalf of the board by 2 directors of the company, or if the company has only 1 director, then by that director. And also the annual report be signed by the secretary of the company. So, these are very important elements of contents of the annual report. So, to include all these things for the due attention and notice of the shareholders, and even in the future the prospective shareholders, investors can have a look at this. So, the annual report must contain all these things. Annual report is a collective thing of the entire how affairs have been conducted in the company. However, section 168(2) states that where a company that is required to include group financial statements in its annual report shall include in relation to its subsidiaries the information specified in paragraph B to J above of subsection 1. Nevertheless, as per section 168(3), the annual report of a company need not comply with paragraphs A and paragraphs D to J of subsection 1. Annual report of a company need not comply with paragraph that we discussed above if all shareholders agree in writing that it did not need to do so. If the shareholders have dispensed with this requirement of providing all the necessary information, then the annual report can omit those inclusions. Any such agreement shall be noted in the annual report also then. Then the annual report must say that the shareholders have so agreed unanimously, all the shareholders. Now what will happen if the reports are not sent? Annual reports are not sent. Annual reports together with the audited reports and so forth. Failure to send reports. What will happen? According to section 169, subject to the provisions contained in the articles of a company, the failure to send an annual report, notice of an AGM or other document to a shareholder necessary to the AGM in accordance with any requirement under this Act shall not affect the validity of proceedings at a meeting of the shareholders of the company if the failure to do so was accidental. That means that in case these reports have not been sent properly, the meeting proceedings are considered to be invalid. First instance, it's invalid. But however, if such failure to send these annual reports and so forth have found to be an accidental error, then in that case the proceedings of the meetings of the shareholders of the company be valid to the extent that it could be rectified. Now that is why in an AGM we have seen many times that if the reports are not available by the time of the AGM, or if it has not been presented within that 15 days prior to the, before 15 days prior to the meeting, then the members object to the holding of the meeting and say that this AGM cannot be held properly and duly because the members have not obtained or the shareholders have not obtained the necessary reports. So in that case the AGM can be adjourned and put to a new date, to a subsequent date, subsequent date. But in case these annual reports have not been sent due to an accidental error, then the meeting can go ahead on that basis and subject to the fact that it could be rectified later on by sending the annual reports pertaining to this AGM, so that the proceedings of such meeting, if held likewise, are valid. Otherwise, if the annual reports are not available due to other fault, not an accidental fault but other fault or by purpose, then the AGM is not considered as valid. The registration of financial statements. Now there is a requirement to register the financial statements of the company. Under section 171 requires that every company that is not a private company shall ensure that within 20 working days after the financial statements of the company and any group financial statements are required to be signed, copies of those statements together with a copy of the auditor's report on those statements are delivered to the registrar for registration. So every company other than a private company is required to send annual reports, the financial statements of the company, and if it's a group, then it's a group financial statement within 20 working days. Within 20 working days from the AGM, from such meeting. Out of the financial statements of the company are required to be signed and copies of those be sent along with the auditor's report for registration. But with regard to the private company, that requirement is not there. Section 170 subsection 2 further states that the registrar may by notice in writing require a private company to deliver to him within 20 working days. Now, with regard to private company, the registrar may direct the private company by notice in writing, requiring the private company to deliver to the registrar within 20 working days the financial statements of the company, or if it is a group, then it is a group financial statement in respect of such accounting periods as may be specified in the notice, together with copies of any auditor's report on those statements. Further, section 170 subsection 3 requires that the copies delivered to the registrar under this section shall be certified to be correct copies by 2 directors of the company. That means, the 2 directors of the company have to sign stating that these copies are true and genuine. Or where the company has only 1 director, then that director has to sign. Now, we are coming to the area of balance sheet date, as I mentioned previously that I will be dealing with it later. Now, what is this balance sheet date? According to section 171(1), subject to the provisions of subsection 2 and 3 of this section, a company shall have a balance sheet date in each calendar year. Company shall have a balance sheet date. Some companies prefer 31st of January, some companies prefer 30th of March. Those are the standards. Further, section 171(2) states that a company shall not be required to have a balance sheet date in the calendar year in which it is incorporated, if it is the first year of existence of the company. Then there is no requirement to have a balance sheet date in the calendar year in which it is incorporated. Suppose that the company was incorporated in 2001 March, then it need not have a balance sheet date like 31st of December. It can, if the balance sheet date falls on the 31st of December, the first balance sheet date can be 31st of December 2022, because it is not required to have that in the same year of its first year. If it's the first balance sheet is in the following calendar year and is not later than 15 months. Now, however, here it says that it is no problem of not having the balance sheet within the first year, calendar year, but however, within 15 months, it must have the balance sheet date. That means that if a company does not wish, like if a company commences in March 2021, if the company prefers to have 31st of December 2021 as the balance sheet date, it can decide not to have the first balance sheet on 31st of December 2021. But they can't drag it till the 31st of December 2022, because the requirement is that within 15 months of its incorporation, the first balance sheet date be provided. That means they have to have it within 15 months, in the sense that from March 2021 up to another 15 months would be June 2022. So, before June 2022, there shall be a balance sheet date. Like the company may decide to have the balance sheet date 31st of March 2022. But however, if they want to have changed the second balance sheet to 31st December 2022, they can do it. There is no problem. And thereafter continue having balance sheet date as of 31st December 31st December of each year. That is not issue. But with regard to the first one, you have to have this. As per section 171(3), where a company changes its balance sheet date, like the one I told you, it shall be required to have a balance sheet date in a calendar year if the period between any two balance sheet dates does not exceed 15 months. They should not exceed 15 months. So, if the first balance sheet date is say 31st of March 2022, it is not a problem of having 31st of December 2022 as the second balance sheet date, and thereafter continue the 31st of December each year as the balance sheet date. But the second balance sheet date cannot go past 15 months from the first balance sheet, and the registrar approves the change balance sheet before it is made, and the registrar to approve the change of such balance sheet date before it is made. Section 171(4) states that the registrar may approve a change of balance sheet date for the purpose of subsection 3 with or without conditions. He has the mandate to do so. As per section 171(5), where a company changes its balance sheet date, the period between any two balance sheet dates shall not exceed 15 months. That is also understood. Section 171(6) makes proviso that the adoption or change of a balance sheet date shall have effect upon receipt of a notice by the registrar to that effect. And further, section 171(7) states that the board of a company shall ensure that unless in the board's opinion there are good reasons against it, the balance sheet date of each subsidiary of the company is the same as the balance sheet date of the company. Generally, balance sheet date of the holding company and the balance sheet date of the subsidiaries should be the same, unless there is in the board's opinion there are good reasons not to do so. Otherwise, the company board shall ensure that the balance sheet date of each subsidiary of the company is the same as the balance sheet date of the company, holding company. In addition, section 171(8) states that where the balance sheet date of a subsidiary of a company is not the same as the date of the company, then the balance sheet date of the subsidiary for the purposes of any particular group financial statement shall be that preceding the balance sheet date of the company. Then the subsidiary's balance sheet date must be subsequent to the balance sheet date of, shall be that preceding the balance sheet date of the company. Investigation of company's affairs. Now, the next important area we are going to discuss is about how to investigate company's affairs. This is a very important aspect, again, as far as company matters are concerned, because there are powers vested upon investigators and inspectors in order to see whether the company affairs are being conducted in accordance with the law, in accordance with its own articles of association. According to section 172(1), the registrar may appoint one or more competent inspectors to investigate the affairs of a company. If the registrar has some kind of a doubt about a company, the registrar has power to appoint inspectors to investigate the affairs of a company and to report on them in such manner as the registrar directs. Then registrar will direct the inspectors what to do. Then it is the duty of the inspectors to report back to the registrar on the application of the company approved by special resolution. If the registrar directs, such manner as the directs, report on what? On the application of the company approved by special resolution. In the case of a company which has issued shares, on the application either of not less than 50 shareholders or shareholders holding not less than 1/5 of the shares issued. In the case of a company which has not issued shares, on the application of not less than 1/5 number of the persons of the company register of members. So, if any one category of this apply to the registrar to appoint inspector to investigate on the affairs of the company, the registrar can so appoint an inspector to report to him on the affairs of the company. Now, what is the requirement of making such application to the registrar to appoint such inspector? if the company has applied, or the application of the company approved by special resolution. The company has applied to the registrar based on a special resolution passed by the company. Or in the case of a company which has issued shares on the application of either of not less than 50 shareholders. If 50 shareholders, not less than 50 shareholders, or of shareholders holding not less than 1/5 of the shares issued, either number of 50 or composition of not less than 1/5 of shares issued. In the case of a company which has not issued shares, on the application of not less than 1/5 in number of the persons of the company's register of members, they may not have obtained, they may not have been issued shares, but as long as their names appear in the registry of members of the company, then in that case, then when 1/5 of such persons who appear in the company's register members, they can do so. Section 172(2) further states that an application under subsection 1 shall be supported by such evidence as the registrar may require, for the purpose of showing that the applicant or applicants have good reasons for requiring the investigation to be conducted by the Registrar of Companies. Further, Section 172(3) makes proviso that the registrar may, before appointing such inspector from time to time as he considered it necessary, require the applicant or applicants to give security for payment of the costs of the investigation. As per Section 172(4), where a person fails to furnish any amount by way of security, as and when required to do so under subsection 3, the registrar may in his absolute discretion direct that any security already paid shall be forfeited and terminate the investigation. If such person fails to furnish the amount of security to be kept with the registrar for him to enable the inspection through an inspector. Section 173(1) states that without prejudice to the provisions of Section 172, the previous one, the registrar shall thereafter appoint one or more competent inspectors to investigate the affairs of the company and to report thereon in such manner as the registrar directs, where the court by order declares that the company's affairs ought to be investigated by a person appointed by the registrar. He may appoint one or more competent inspectors to investigate the affairs of a company and to report thereon to the registrar, if it appears to him that there are circumstances suggesting that its business is being conducted with intent to defraud its creditors, company creditors, or the creditors of any other person, if its businesses is being conducted with intent to defraud its creditors or the creditors of any other person, or otherwise for a fraudulent or unlawful purpose, or in a manner which is unfairly prejudicial to any part of its shareholders, or it was formed by any fraudulent or unlawful purpose, or persons concerned with its formation or the management of its affairs having connection therewith, been guilty of fraud, misfeasance or other misconduct towards it or towards its shareholders, or that its shareholders have not been given all information with respect to its affairs which they might reasonably expect, or it is necessary to do so for any purposes of this Act. So, in such circumstance, the registrar has the power in such way to appoint inspectors to conduct investigations as to the company's affairs. Section 173(2) states that an inspector may be appointed under this section on the condition that any report that he makes is not for publication, and any such case subsection 3 of section 176 shall not apply to such reports. So that an inspector may be appointed under this section on the condition that any report that he makes is not for publication, only as a kind of a informative literature or even kind of communications that may be kept with the registrar, and for the purposes of fulfilling the requirements of the persons who have requested the registrar to conduct such investigation. And in any such case, subsection 3 of 176 shall not apply to such reports. Now, power of investigators to carry out investigation into affairs of related companies. The power of inspectors who are appointed to investigate on a company now having power to investigate on the affairs of related companies. When an inspector is appointed to investigate on a particular company, and how can he now, if he requires, investigate as to a related company of this company? According to section 176(4)(1), where an inspector appointed under 172, 173 to investigate the affairs of a company considers it necessary for the purposes of investigation to investigate all the affairs of any other body corporate which is or has at any relevant time been the company's subsidiary or holding company or a subsidiary of its holding company, he shall, with the prior written approval of the registrar, have power to do so, to investigate on a related company, and shall report on the affairs of the other body corporate so far as he thinks the results of his investigation of its affairs are relevant to the investigations of the affairs of the first mentioned company. In such circumstance, the inspectors have the power to carry out investigation into the affairs of related companies. Section 175(1) states that where an inspector is appointed under section 172 or 73, it shall be the duty of all directors, officers and agents of the company and of all directors, officers and agents of any other body corporate whose affairs are investigated by virtue of section 174 to produce the inspector all the books and documents. So, the board, officers and agents of the company are obliged to produce to the inspector all books and documents of or relating to the company, or as the case may be, the other body corporate which are in custody or power. Attend before the inspector when required to do so, and give to the inspector all assistance in connection with the investigation which they are reasonably able to give. As per section 175(2), an inspector may examine or on oath or affirmation the officers and agents of the company or other body corporate in relation to its business, and may administer an oath to or take the affirmation of any such person. Section 175(3) states that where an officer or agent of the company or body corporate refuses to produce to the inspector any book or document which it is his duty under this section to produce, or refuses to answer any question which is put to him by the inspector with respect to the affairs of the company or other body corporate, as the case may be, the inspector may certify the refusal in writing to the court, so that the inspector may certify the refusal in writing to the court and the court may inquire into the case, and after hearing any witness who may be produced against on or behalf of the alleged offender, and after hearing any statement which may be offered in defense, punish the offender if he had been guilty of contempt of court. Now, this particular section is very important for the fact that, as you know, that court is the custodian of a company. Company is an artificial person. It is not like a natural person. It is a legal person, and the court always has supervisory powers over company. So, likewise here, if the inspector is not being given the due opportunity to investigate on a company, the inspector himself can report this to court, and the court can thereafter inquire to it and make orders to the officers of the company to act duly in providing all necessary things that are required by the inspector. In case that the officers of the company fail to honor the court order, then committing such offense is to be dealt with as a guilty of contempt of court, or that the official has committed an act of contempt against the court order and be punished likewise. Section 175(4) further states, where an inspector thinks it is necessary for the purpose of investigation that a person whom he has no power to examine on oath or affirmation should be so examined, he may apply to the court, and the court may, if it thinks fit, order that person to attend and be examined on oath or affirmation before it on any matter relevant to the investigation. On any such examination, the inspector may appear either personally or be represented by an attorney at law. If he is presented by way of an attorney at law, his costs should be borne by the company. The court may put such questions to the persons examined as the court thinks fit. The person examined shall answer all such questions as the court may put or allow to be put to him. The person examined may at his own cost be represented by an attorney at law who may put questions to him for the purpose of enabling him to explain and qualify any answers given by him. Now, in case the officials of the company are to give evidence or explanations to the in the court, then retention of an attorney at law in such a case by such officer has to remunerate that particular attorney at law by himself, and he cannot use the company money for that. The examination shall be recorded in writing, and the person examined shall sign the record, and subject to any directions by the court, the record of an examination under this section shall be admissible in evidence in proceeding under this Act. Now, if you look at the inspector's report, according to section 176(1), an inspector may, or if he is so directed by the registrar, shall make interim reports to the registrar in the course of an investigation until the final investigation report is submitted. Shall, on the conclusion of an investigation, make a final report in writing. So, interim reports and final report can be given by the registrar, by the inspector to the registrar. Section 176(2) further states that where an inspector was appointed under section 173 in pursuance of an order of the court, the registrar shall furnish a copy of any report made by such inspector to the court as well. The registrar can't wait at that point if the inspector has been so appointed by the court. It's the registrar's duty, once the interim or final reports are obtained from the inspector, then the registrar to produce them to the court. As per section 176(2) further state, 176.3, the registrar may, if he thinks fit, forward a copy of any report made by the inspector to the registered office of the company, furnish a copy of any report or the request and on payment of the prescribed fee to any shareholder of the company or of any other body corporate dealt with the report by virtue of section 174. Any person whose conduct is referred to in the report, the auditors of the company or body corporate, the applicants for the investigation, or any other person whose financial interest appear to the registrar to be affected by the matters dealt with the report, whether as a creditor of the company or body corporate otherwise, cause the report to be printed and published. So, inspector's report have to follow such provisions as in the Companies Act. So, for today, with that, I conclude my lecture and looking forward to present you the rest of the things on the next day in my lecture with other new areas that I have selected to deal with in lecturing you on the statutory implementation of the Companies Act number 7 of 2007 pertaining to various areas of the company law. So, thank you very much for listening and do join me on the next day.